Why is healthcare a great investment for many years to come? Why I chose Vanguard Healthcare Fund. If you are interested, keep watching. Welcome everybody. This video is based on my investment in Vanguard Healthcare Fund, which I bought in 2011. It feels like a year ago when I bought it, but it's been already 9 years. Wow, time is flying. Since I owned the fund 9 years ago, what I did, I just deposited money and I let it sit. I did not do any active managing of the funds in this fund. But let's take a quick look at the numbers of the fund, and then I'll show you my personal holdings in Vanguard Healthcare Fund, and then we'll talk about this, why our overall health is declining. So the fund is concentrated on pharmaceutical firms, medical supply firms, and research firms. Expense ratio is 0.32, which is very low. Vanguard is famous from having one of the lowest expense ratios in entire industry, and minimum to open the fund is $3,000. Fund is considered to be risky but can bring more rewards. Right here is hypothetical growth of $10,000. If in 2010 $10,000 was deposited, right now it would be worth $42,210.12. Let's take a look at the prices and performance of the fund. Right here is comparison of the benchmark index, healthcare benchmark index with the fund, and over 1 year Vanguard fund is bringing 18%, around 19%, and the benchmark is 14.5%. But I usually look at the numbers from the longest perspective. Right here since inception, so the Vanguard fund is bringing 16% and the benchmark is bringing 10%, so it's outperforming benchmark really well. Here are the numbers: return before taxes, return after taxes, return after taxes on distribution and sales of the fund's shares. I never really look into those numbers because I didn't sell my shares. I think in 2035 there will be time when I will come back and take a look at this at these numbers right here. Let's take a look at the portfolio and management. So numbers of stocks in the fund, it's 88. In a benchmark is 263. I like this, that there is less stocks in a fund, because it shows that management feels confident and they know what to pick up and stick with this. So this is pretty important for me. Medium market cap is 68.8 billion. Benchmark is 102.8. Price earning ratio is 24.8. Price book ratio is 3.8, return on equity is 13.2, and earning growth rate is 15.3%. So these are really great numbers. And what is very important for me, this number, turnover rate, like I said earlier, 18.4%, which means that turnover is pretty low. There are some funds where turnover rate is around 50-60% and more. Right here turnover is very low, and I really like it, because I'm a long-term investor and I don't want fund managers to buy and constantly sell the shares of the fund. Let's take a look at the fees and minimum. Like I said, $3,000 if you would like to open the fund. And right here are fund specific fees, purchase fees, none, redemption fees, none, 12B1 fee is none. So like I said earlier, Vanguard is one of the most reputable companies if you want to pick high quality funds. Let's take a look at the distributions. Distributions are done on annual basis in March and in December. Dividends, short-term capital gains, long-term capital gains, and the same in December right here. And of course here you can read more information about the news. There are news feeds here. You can subscribe if you are interested in dive much deeper into informations about the fund. So let's quickly take a look at my holdings of the fund. Total purchases which I did so far in the fund accounts for $35,873.91, and I did this over in June 2011. I deposited $10,000. Then in July I deposited another $10,000. Then in November 2011, $2,500, and then in December 2011, $1,350, and then my last deposit was in January 2016. I deposited $10,909.93. So my total market gain from the fund equals $17,249.16. My income return equals $43,819.96. So my total personal investment return from this fund equals $61,069.12. As of right now, the balance on the fund is $96,943.03, and annual rate of return is 13.7%, and my total return on investment is 169% from this fund, which is not something really great, but on another side, for a very simple investor like me who just dumped the money and let it sit, is a great appreciation. So right now, let's talk about our healthcare status and our healthcare system. I will be straightforward to the point. We are getting sicker and sicker every year. Why are we getting sicker? There are two main reasons. Reason number one, our diets are getting worse. Reason number two, our medical system is not oriented on preventing diseases, it is oriented on managing symptoms of the diseases. There is more reasons why we are getting sicker, but those are the most important in my view. So let's focus on those two reasons. What I mean by saying that our diets are getting worse is consumption of more and more processed food is causing that more of us are getting more obese and overweight. According to the research, by 2030, all of the US states will have obesity rate of 35% and over, and some of the states will have obesity rate 60%. Let's take a look at the graph where you can see different age groups. All age groups go in one direction. There is no curve on this graph. This is really scary graph if you realize that it is based on scientific research, and most likely what you see will happen in the future. This graph means that an increased amount of obese people will amount for drastic increase in healthcare related issues, and this will translate into increase in healthcare costs dramatically. According to the research, healthcare costs per year are 147 billions, and those costs will only climb as nearly half of the adults are projected to have obesity by 2030, according to the study done by New England Journal of Medicine. Second reason why we are getting sicker is our medical system is oriented on managing symptoms, not curing diseases. I will give you the example right now. In modern medicine right now, there is no cure for calcification of veins and arteries. If someone has really advanced calcification, it will eventually cause blockage in the blood flow in arteries, and it will cause stroke, heart attack, partial paralysis of the body, or very often a death. Every 4 minutes someone dies from the stroke. If someone is lucky enough to get alive to the hospital with a stroke, they will open him up and remove blockage. It is like a roto-rooter cleaning clogged lines, cleaning the veins and arteries in order to have a blood flow. On the other side, in natural medicine, there is a natural way to reduce and prevent calcification of the veins, arteries, and soft tissues in human body. It is called vitamin K2 MK7. This vitamin is activating something called matrix GLA protein. And those proteins basically clean human bodies from calcium in the wrong places, like joints, arteries, veins, and then calcium is deposited where it's supposed to be in our bodies, which are bones and teeth. You may be thinking right now why it is not used. Why isn't this prescribed to all people with high calcium score? Many of them will eventually have stroke, heart attack, and die. Why not try to prevent this if there is a natural, harmless way to prevent buildup of calcium in our body? Because vitamin K2 is a natural compound and cannot be patented. There is no money here for conventional healthcare and specifically for pharmaceutical companies. You will not see many cardiologists prescribing K2 because they have tons of different drugs recommended from pharmaceutical companies. There are studies done proving that K2 is reducing calcification, and I will post the link to those studies in the description. The most famous is called Rotterdam study. There is also a great book about K2 based on the research. I'll put the link to the book in the description as well. The title of the book is Vitamin K2 and the Calcium Paradox. So right now, healthcare is a great business, and its main goal is to make money, not curing the patient, because a healthy patient is useless for modern healthcare system. Sick patient is an asset for modern healthcare. Very good and long-term asset which pays dividends for as long as the patient is sick and is using medical facilities and pharmaceutical products. Most of the research in medical universities right now are sponsored by pharmaceutical companies, and they expect certain outcomes from those researchers. This, what I described to you, are unintended consequences of the actions for many years, which started 100 years ago, when a couple of richest people in the country back then invested in chemical and pharmaceutical companies, pushing on the side natural medicine. From that point, natural medicine was getting weaker and weaker, and pharmaceutical medicine was getting stronger and stronger. You may think that this is a pretty extreme and narrow view of the healthcare system, but that is a reality we are living in right now. And I don't want you to believe that every person working for pharmaceutical industry or for the healthcare system is evil and he wants you to be sick so the healthcare system can benefit. No, not at all. Most healthcare workers are great people and they put their heart and soul into their work, especially in the recent health crisis. But the system which they are operating in is designed in the way how I described to you earlier. And to change this system is like human beings going to another galaxy within next 2-3 years. All this what I just said is just the scratch of the surface and the tip of the iceberg. There is much more to entire healthcare industry, and I am aware of this. There is a great book about this subject. I highly recommend this book to everyone who disagree with this, what I'm saying here about our healthcare system. It will open your eyes. The title of the book is American Sickness by Elizabeth Rosenthal. I'll put the link to the book in the description. So healthcare right now, like I said, is and it will be very profitable business. Let's talk quickly about the moral aspect of investing in healthcare. I feel like it is a little bit immoral to invest in healthcare for those reasons I described above. But on the other side of the picture, there is a whole part of the medicine which deals with all kinds of traumatic accidents, transplantations, and they are genuinely doing amazing procedures because of the advancement in technology. And this is the bright side of the modern medicine in my view. Many people are alive right now thanks to the heart transplant, liver transplant, lungs transplant, and so on. 100 years ago, this was only a dream, and right now, this is reality. Healthcare, like all industries, has a good side and has a bad side. But from the perspective of the investor, it is a great long-term investment for many years to come. I don't think that this industry will disappear or decline during next 50, 100, 200 years. Please revisit this video every couple of years. I'll post my returns in the comments section below to show you how my healthcare fund is doing. One more thing, if you are supporting my channel and are planning to open an investment account and you want free stock, there is a limited time offer on Webull. You will get 2 free stocks when you deposit $100 on your account. Value of the stocks is up to $1,400. So please use my link in the description if you have any friends, family members who are planning to open an account on Webull, so please send them my link. Thanks to this, I will also get a free stock with no extra cost to you. I truly and genuinely appreciate all your support. All the funds will go to the hiring a good English teacher so you can finally understand what I am talking about right here. Thank you very much for watching. I appreciate your time with me right here. If this video was interesting to you, please hit the thumb up and subscribe to the channel, and have a great day.